This is, in my opinion, the value proposition of a generation. Dunnigan, this is I think, one of the last trains out. And I hope I'm wrong, I really do, but I think we're on fast track to crazy town.
Here at Liberty and Finance, we're licensed brokers with Miles Franklin. We are standing by the inventory, ready to make sure you get what you need, even into the wee hours of night and on weekends, because preparedness doesn't stop. Call us 1-888-81-LIBERTY. That's 1-888-815-4237.
Welcome back to Liberty and Finance. This is the weekly market wrap-up with Andy Schectman, the CEO of Miles Franklin Precious Metals. He's joining us this Tuesday, March 8th, 2022. Andy, thanks for coming back on Liberty and Finance.
Great to be here, Dunnigan. This is the craziest time I have ever remembered in almost 33 years of doing this, and it's great to be here for a few minutes and chat about it. So, as always, thanks for having me, buddy.
It most reminds me of the Silver Squeeze 1.0 on January 31st into February 1st of last year, and the radical changes, the big changes in price, the drops in availability, the increases in premiums that we saw at that time. Can you bring everyone up to speed on what you're seeing across the retail bullion industry over the last 24 hours?
In the last 24 hours, we've seen a decimation of availability. The same exact thing that I've been harping on now for the better part of a year and a half with you and your listeners is happening in real time. Last night, I was talking to a very large client of mine's mother. He asked me to talk to mom and talking about Silver Eagles. And I said, listen, you know, at $8.75 or $9 over spot on Silver Eagles, we're cheaper than anyone in the country. And by the time I hung up the phone, every major dealer in America was roughly between $11 and $12 over the price of silver on Silver Eagles. What this is indicative of is the inability to get new product at the same price. The big distributors are jacking up their prices, and availability is becoming scarce. And, you know, we've talked about this before, when I look at this, I'm looking down the line. And down the line is not easy. You know, I'm already looking again at the UK Britannias. I took them off my price list today because I'm told 4 to 5 weeks before I get anything. Who knows what 4 to 5 weeks brings any longer? 4 to 5 weeks is ridiculous in this industry. It used to be 4 to 5 days. Now it's 4 to 5 weeks. And what we are seeing is I guess an exclamation point on awareness. And we've talked all about this stuff over and over and over again. I'm sure it gets old to listen to, but it's happening in real time right now. And getting product is not any easier. And you can look at every major online retailer in the country. Their premiums have gone up at least $1 or more across the board on just about every product they have in silver. And we're continuing to raise them again here today. And it's all based upon what we think we can get. Now, one other thing that I'd like to mention. Earlier today, I was told that the same thing that we saw a year ago in gold, where the difference between spot and the May futures contract is about 30 cents or more away. Spread between current spot and May futures, which is already well over $27. So when we try to get new product, it's based off of the May futures price. So in other words, there is the same, I guess you could call it arbitrage situation going on right now between forward spot and current market. It's a situation where a lot of the dealers are actually having to jack up their spot price on their website right now, because in terms of getting new product, you will not be able to get new product at the spot price that COMEX is quoting. You have to go off of May, off of this switch. And it's a little bit complicated to explain, but simply to say this, that we're entering that situation right now where price discovery in this industry is becoming harder and harder and harder when you sell out a product, to go and secure the product is becoming very difficult. And the challenge now isn't just in getting product and paying for it. It's also in realizing that there are games being played with the spot price on COMEX. And the big dealers understand that this is putting them in a tricky situation also. So every dealer in the country had to jack up their spot price today higher than what COMEX was talking about, because if you sell out a product, you cannot buy it back from the distributors at today's spot price. You got to go all the way out to the May contract. They will not use today's COMEX price to lock it in. So these are crazy times, Dunnigan, and honestly, I truly believe we haven't seen anything yet. If it continues down this path, if we get to Monday and the Russians are kicked out of SWIFT, like they're talking about, what does Monday look like? I don't know. If you told me we wake up to a $4 or $5 or $6 gap up in silver, I'd say it's totally possible. If you told me we wake up to $2,200 gold, I'd say it's totally possible. And we are pushing the Russians away from the dollar. And I think at this point, they don't have a whole lot left to lose. They could peg their oil to gold or sell their oil for gold. They could peg their ruble to gold. And I think at the very same time, we are incentivizing the Chinese to consider doing the exact same thing with their CIPS system, CIPS. I think it stands for the Cross Interbank Payment System that they designed in conjunction with Russia. This is a alternative to the SWIFT system. And we are getting really, really close to the law of unintended consequences when we have politicians rather than economists. And really, the economists at the Fed aren't any better. But when we have politicians directing things right here that are going to inversely and negatively impact the dollar, I think people need to buckle up, because I'm telling you, as soon as this coming Monday, I think there could be fireworks, which leads me into what you said earlier about the silver squeeze. I'm going to load up on futures contracts on Friday so that we can do business over the weekend, because I have no idea what Monday brings. And I have a really strong suspicion that we open up Monday, as the Russians are formally kicked out of SWIFT, with some fireworks. So that's the way I'm looking at things a week into advance.
Just recapping what I'm getting from what you're saying is, and you didn't mention junk silver along the way. You mentioned sovereign silver coins. In many cases, entire categories of those completely out of stock for a month or more. You mentioned premiums across the board on silver products moving up. I will add to that just your observation about lack of availability of junk silver. We usually carry about 12 different categories of that. I see 2 realistically, and those aren't even in stock. Those are a week or more out. I'm also seeing what I've never seen before in 2 years, and that's the premiums on 1,000-ounce COMEX bars coming up. And maybe that's related to what you were just talking about, the COMEX price not being trusted anymore. Can you hit that one?
Yeah, it is. It's 100%. It's that there is a problem right now with the COMEX price being looked at as realistic. And, it's only a small difference between the COMEX price and the May futures. But the dealers and the distributors who provide the product are not willing to sell it at the current COMEX price. They are only going to do it at the May futures price. Now, it's a very small amount, but this is the beginning of cracks in the seams. And here's my next prediction. My next prediction is that this happens with gold, too. Not yet, because really, over the past 2 years, as you well know, the majority of the demand has been in silver. And I think you're going to start to see that spill over into gold, too. It's people shouldn't forget that gold was reclassified Tier 1. And the central banks are massively accumulating it. Look at what gold has been doing. And to a degree, it's outperforming silver. Now, ultimately, silver, I think, will outperform gold before it's all said and done. But the point of it is that I think there will come a drive into very, very large purchases into gold if things really start to get shaky for the dollar. And when that happens, the dealers, who many of which are really just giving gold away because it's been sitting on their shelves for so long, the cost of carry renders that something that would dictate selling it at very small markups just to continue to move it, maybe redeploy it into silver, which is moving. It's coming in gold, too, and we're not there yet, but I would guess that if we see this continue, you're going to see high premiums on gold, long delivery delays, and inability to source product. It's not going to only be immune to silver. But really, to answer your question, the bottom line is simply that the dealers are not willing to sell. If we sell out a product, they will not honor today's COMEX price to lock in new product. We have to go out to the May price, which is 30 plus 40 cents higher than what current spot is. And say what you want for COMEX, it's a system that I think is showing its weaknesses. And when you continue to suppress the price of gold and silver, I think you're going to end up having these kinds of anomalies happen and these kinds of distortions happen that will only get worse before they get better. So I know it's somewhat confusing. Then again, let me just simply say that if we buy new product, it will not be today on today's COMEX price. It will be at the May futures price, which it's never been that way before. So, these are uncharted waters in lots of respects for all of us, including trying to continue to get product in the door here. And you're going to see premiums through every single company in America go way up, and you're going to see products sold out with every company in America. And I think it's happening right now. And I don't show any signs of it abating whatsoever. In fact, getting sovereign coins right now in all of my career has never even been remotely this hard. I don't know if I mentioned to you this last week, and maybe I did, but I think it bears repeating. We used to store and stage Krugerrands and Philharmonics and Britannias and Kangaroos. We would store and stage them in our warehouse from the very large distributors. And they would call me up and they'd say, hey, why don't we send you 50,000 Britannias? And I'd say, listen, we don't need them. And they would say, well, I'll tell you what, we'll send them to you. You keep them in your warehouse. If you need them, great. If not, we'll pay to have them shipped out. And we won't charge you for holding them. And great. That would be perfect. And now those days are long gone. I'm 5 weeks out on getting Britannias. And, when I sell out of Krugerrands, when I sell out of Philharmonics, when I sell out of Kangaroos, the exact same thing is happening. The delivery delays are getting longer. The prices are going up. And even the shenanigans on COMEX are starting to factor into how we price things. So may you live in interesting times, Dunnigan, and these are interesting times. The Chinese curse, as you know, I don't think we've seen anything yet. I really don't.
Two things I wanted to follow up on what you just said. One is you mentioned gold being in some ways behind silver in the demand and outage of availability category, but in terms of getting close to its all-time previous high, this morning gold went to $2,050.50, which is within 1.5% of its all-time high of 2080 set over a year ago. And that you can't say that about the major equity markets. Everybody's been talking about the major stock markets, setting all-time highs and that kind of thing. But here, gold's within a spitting distance of its all-time high, and you don't hear about that on the evening news.
No, because and the reason that gold and silver are held down both in price and in rhetoric is because it's the canary in the gold mine. It speaks to the frailty of the system. This is why gold and silver have not been allowed to rise. Look, Bank of America short 800 million ounces. Today, the price of silver is up 57 cents. Call it 60 cents. They're out $540 million they've lost today alone in the rise in silver based upon a short position of over 800 million ounces. The rumor is JP Morgan came in and bailed out the COMEX the other day on March deliveries because there were more deliveries than there were silver ounces in the registered category. And JP Morgan came in and made that silver available to avoid what could be a major short squeeze, a major run on COMEX. We're that close to these things happening. And any bank that would be stupid enough to be short 30 million ounces of gold and 800 million ounces of silver in this environment has a death wish. It's the same stupidity that put Bear Stearns out of business when silver went to $21 an ounce. If it weren't for these banks, which I think are in many ways are doing the bidding of the Western central banks, because here again, if gold and silver were where they should be, I think you would have a lot more panic in the streets, and it would lead the CBS Evening News. It would lead Jim Cramer's screaming about what's happening. It would be that way because it would speak to the frailty of the system. Instead, it gives fodder for them to say, well, look at gold and silver. They're not doing anything, even in these horribly inflationary, tumultuous times. It's crap. It's crap because the biggest money in the world will not stop accumulating it. And I truly, truly do believe that the only way you can successfully manipulate these markets are to push them in the direction they are going, and it is moving in the opposite direction of being held down. The demand is off the charts. When you see every company in America selling Silver Eagles at north of $12, that tells you they cannot keep them in stock, and the mint is the model of inefficiency. When you see the deliveries that we are seeing, record deliveries coming off of COMEX and off the ETFs, there's a lot going on that is completely ignored by a manipulated price. And I think when it does break, because of all the manipulation, when I think of the manipulation, I think of a giant hand pushing a beach ball further and further under the water. And when it finally pops, it pops up higher than anyone thinks possible. Well, everyone will think it'll just come right back down. But you know what? The unintended consequences of lopping off demand, like pushing the Russians out of the SWIFT system, and I think in many ways opening the eyes to the Chinese to incentivize all of these big institutions to de-dollarize and move away from the dollar, that cuts demand for the dollar, and the Fed will not stop printing. You add more of something with less demand, you have falling prices, which in and of itself must see rising interest rates to compensate for the loss of value or purchasing power in the dollar. The market is bigger than the Fed. They cannot continue to come in and monetize the debt, be the only ones buying these treasuries. You know, the Fed comes out and says, well, we're going to raise rates by 0.25%, even with what's going on in Russia. Who cares? 0.25% with 8% inflation. I mean, it's spitting in the ocean. It means nothing at all. It's insulting almost. In order to get equilibrium in the economy, they'd have to have interest rates and inflation in check at 8%. And I don't even want to keep saying over and over and over again how inflation, CPI, is not counting food, energy, and housing. You got gas at $7.50 in California, and it's not counted in the CPI. You got houses double from what they were last year, and it ain't counted in the CPI. You got wheat at all-time highs, and it ain't counted in the CPI. When are people going to wake up and realize that you are being scammed and lied to? So they manipulate all of the statistics out of the BLS. That they should take L out of labor and just make it BS. The numbers that come out of the government are purposely understating dramatically inflation, and yet they're talking about getting tough on inflation by raising rates 1/4 basis point. Who cares? It's irrelevant. Real inflation is north of 15%. And long before they find that equilibrium in the market where interest rates and inflation are hand in hand, you collapse the market. You raise interest rates to 8%, you've just kneecapped the bond market by over 80%. And what would that do when you have 8% on the federal funds rate and 11 or 12% 30-year mortgages? Goodbye, real estate market. And the rule of 70 seconds tells us you take the interest rate and divide it into 72. It tells you how long before your principal doubles. At 8% interest rates, you could buy treasuries, and in 9 years, your amount would double. You put $1 million in 10-year treasuries at 8% in 9 years. Before it even expires, you've doubled your investment. Who's going to buy stocks at all-time highs in that environment, in this environment? All three pillars of wealth are inversely correlated to a rise in rates. They cannot do it. So what will they do? They will eviscerate the dollar. And when you see lopping off a good portion of demand by kicking the Russians out of SWIFT, who account for a large amount of dollar demand, they're the largest exporters of oil in the world, and oil is denominated in dollars. You are just cutting off a massive swath of demand for the dollar, and they're going to continue to inflate, which is going to drive down the price of the dollar, which at some point, the holders of our bonds and our dollars are going to say, what the hell are we doing holding a depreciating asset, rapidly depreciating, that's giving us nothing in the way of return? And oh, by the way, it's issued by an insolvent government, and who's beating the drums of war by sending aircraft to Poland, which is one step away, one mistake away from being dragged into World War III. At what point do people wake up and realize that this is happening? And when you look at what's going on with the prices of products, retail, and you want to just say, well, it's the greedy wholesalers or the greedy resellers, or he's just talking his book. I don't have time for that anymore. Believe what you want. But I will tell you, as God is my witness, it's coming. And it's never, ever, ever been this hard. And I will tell you, if I had to think what puts me out of business, it's not government edict. It's not a big tax on metals. It's not confiscation. It's there ain't nothing to sell. And if we see this type of environment, do you think anyone's going to cash out and go back to dollars so we have secondary market products to sell? Of course not. Their grip will only tighten as they realize that the motivation they employed to buying this stuff has only been accentuated. Dunnigan, we're at the 12th hour right now, and I just hope people can believe me that I've never seen anything like this. And this demand parallels, rivals, maybe even slightly outpaces what we saw that weekend last year in the end of January, February, the silver squeeze weekend, which I never thought would be equaled. Well, I think we're just about there right now. And if it continues, if I had a guess, then this is just a guess, and I'm going to put myself out on a limb. We wake up Monday morning to some massive fireworks and some prices in gold and silver that people will be shocked. That's a guess. It's probably not a smart one, but in my gut, that's what I feel. Monday being a very big day when they're kicked out of the SWIFT system, I think we wake up to the beginning of a new reality.
A lot of people are concerned about the fireworks and the upside down and the crazy world and questioning, what lies ahead for their financial futures. They're looking at their nest eggs, their retirements, their savings, all of their pensions, everything. Those people are asking lots of questions about trustworthiness and stability. Again, James Rawls, we interviewed him and he talked about we're entering the age of deception and betrayal. And the question that some people are asking about trustworthiness of storage, we've talked about that with you in some recent interviews. They're also wondering how secure their delivery of metals is. Has there been an increase in your observation of interception or tampering with packages being delivered in these times? Can you address those and help people understand whether these, which are good questions, they're fair questions, but whether that you think that the risks are credible at this point or not yet a problem?
I think they've come down a good bit from where they were. The risk was during COVID, UPS and FedEx changed their policy into just like Domino's Pizza did, touchless service, whatever. They leave it on your front door. Same thing here. But they were supposed to ring the doorbell and they would say, oh, hello, Mr. Kaiser. Is this your package? Yes. Okay. Are you, or if your son answered, well, is Mr. Are you 18? Yes. Okay. Mr. Kaiser live here? Yes. Okay. What's your name? Okay. And they would enter that information in. But what we saw was 1%, 2% of packages, UPS and FedEx were just flat out lying. And they would just say, yeah, I saw Mr. Kaiser. He was there. And they left it on the doorstep. Well, that had a negative effect, small degree. But now that those policies are back to signing, it's not what it was. It created, in fact, I remember thinking this is going to be a massive problem. It was much less of a problem than I had anticipated. But I used to stand up on stage a few years ago and say we had never lost a package ever in 25, 30 years. Well, we had some lost packages. They were all covered by insurance. The investigation comes into play. They get, the police involved, the whole 9 yards. And if indeed it looks like the package was stolen or intercepted, insurance comes into play. But I think that you will see that trend dramatically decrease now that the adult signature must be received. And so what was pretty awful, the possibility of things getting stolen and intercepted, to me has been greatly mitigated by the COVID protocols being relaxed quite a bit.
In the face of all of this shortage of sovereign silver coins, it sounds like you still have the ability at this moment to get some bars, even though you're struggling to get sovereign coins in. What specials do you have to offer this week?
Yeah, we have 40,000 silver eagles in stock too, and we're priced at like $11.50 over the price of silver. That's cheaper than just about everyone in America. I hate to even say that. It's hard to get excited about it. We do have some sovereign coins, not a lot. But so for that reason, we're offering, in my opinion, the classiest silver bars in the market, period, in my opinion. Both, they're made by the PAMP Swiss Mint, PAMP, in Switzerland. They're, in my mind, the most respected mint out there, refinery out there, that isn't a sovereign mint. And we're offering the 10-ounce silver bars and the kilo silver bars. The 10-ounce silver bars come in boxes of 50. You don't have to buy a sealed box of 50, but it's akin to a mint box. There's 500 ounces in there. It will be sealed. And those are going to be $3.75 over the price of silver. Now, I'm going to try to hold these premiums until I sell them out. And it's really hard to do. We can end up going upside down and trying to get new product. But $3.75 on the 10-ounce silver bars and boxes of 50. And we have 1,500 of those in stock. And we have 500 kilo bars in stock, PAMP SUISSE kilo bars. And those are going to be $3.50 over the price of silver per ounce. Those come in boxes of 15. Both of these bars are serialized with certificates of authenticity. If you want a sealed box, you can get it. If you just want to get 1 or 2 or 3 bars, you can get it. But literally from a standpoint of, if you were going to show one of your buddies a bar, a silver bar, this is what you would show them. They fit the stereotype. They are beautifully crafted from probably the most respected refinery in the industry. And I don't know how old the PAMP SUISSE mint is, but if I had to guess, it's probably 100 years old or more. And from a value standpoint, even at these levels, you're saving $1, $2, $3 an ounce or more, all the way up to the Silver Eagle, $5, $6, $7 an ounce in getting these. And when you talk a kilo bar, it's 32.15 ounces, about the size of an iPhone. A 10-ounce bar, about the size of a Halloween candy bar. You're talking small enough to provide good utility, but the value, in my mind, in the end, is much better than the bars, because as my mentor, Richard Russell, always said, in the end, it'll be about the number of ounces that you own. And I would like to caveat that and add my own disclaimer. Do not be penny wise and pound foolish. Now, you mentioned the 1,000-ounce bars. I like them. That's the cheapest way to go. I do like them. But when you buy a 10-ounce bar, you're 100 times more flexible for, a couple dollar difference. Is it worth it? Maybe, maybe not to some people. Or in the case of a kilo, you're 30 times more flexible than you are with a 1,000-ounce bar. So in the end, it is about number of ounces, but tailored with maintaining good liquidity and flexibility. And I think you get that in the 10 and the kilo a lot. I love them. I've been buying them myself for the better part of 6 months. The Valcambi and the PAMP and the Australian ABC. It's just value and liquidity meet perfectly right now, in my opinion. It's the place to be.
Well, Andy, our viewers always appreciate your presence with us here on the weekly market updates, because you're looking forward. You're giving us a view into not only the market futures, but the supply chain futures, the product availability futures, and you're tying it together with what's going on in our upside down world. And as always, we're just grateful for your presence here on Liberty and Finance.
It's great to be here. And I want everyone to see this shirt. My friend Keith Newmeyer sent me this hashtag triple digit silver. I just want to make one comment. If we were to take the price of silver, or the price of gold right now of 2,000, and let me just do a little math here, $2,041, and we divide it by 7, that's $291. If tomorrow morning or Monday morning, I'm not saying this is going to happen, but if the price of silver were valued at $291 an ounce, that's not crazy at all. In fact, what that is, it's the geologic footprint of a 7-to-1 mining ratio. And in a world that is massively accumulating silver, both industrially and monetarily, these are the kind of numbers that we can expect to receive. I just want people to know that, to me, it's wealth, not an investment, but the investment potential is extraordinary. This is, in my opinion, the value proposition of a generation. Dunnigan, as the good Lord is my witness, I swear to everyone out there, I mean this to my core, this is I think, one of the last trains out. And I hope I'm wrong, I really do, but I think we're on fast track to crazy town, and I think it's only going to get crazier. So, as always, I love being here. Thanks for the opportunity to continue to have these discussions and your friendship. And like I keep saying, we'll see this through to the end and see where it takes us. But right now, it seems like we're heading to crazy town. So until next Tuesday, hopefully we don't hit crazy town before then. And if so, I'll be ready to jump back on wherever I am.
Yeah, and folks, we're planning on trying to do a live stream next Tuesday evening at 9 p.m. Eastern, 6 p.m. Pacific. So trying to pull that together with some travel going on, make it all happen. So Andy, thanks for your flexibility. And
let me just add one comment to that. I will be in San Diego next Tuesday speaking at Bix Weir's road show. I speak, I believe, on Wednesday. So I'm going to be doing that like you've done many times from a hotel room, but I wouldn't miss it. And so you'll have to excuse me from not having the same background I normally have, but I will jump on and look forward to doing that because these times call for this kind of information and our conversations mean a lot to me. So I'll be looking forward to catching up with you from the road next Tuesday.
Yeah, I will also be in a hotel room because we'll be on our homestead search again and looking forward to seeing you as well. Take care.
Likewise. See you later.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we will let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be double boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Elijah, my brother Kaiser, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.